Okay, what's up, everybody? This is Sunko, the Korean bro. Today is 2022, uh, September 19th. And let's look at articles, okay? Hmm. hmm Kroger is your own one-step consumer staple stock. Upward shares stumble into bargain territory. Volkswagen sets Porsche IPO at up to 9.4 billion euros. US markets sink ahead of another expected interest rate hike. Hmm. Adobe perfects the art of the face plant for investors. Hmm. Swiss signs controversial 6 billion deal to purchase F-35 fighters, where expiration risks still remain on Wall Street. Environmental group attack EU's green label for gas nuclear. Hmm. Four ways continuous learning will make you and your business unstoppable. Okay. Stock market, three islands of strength and a sea of rend. Okay, let's look at these articles first, okay? Kroger is your one-step consumer staple stock. Okay. Grocery chain operator the Kroger company stock is trading up 4.5% in 2022 for outperforming tech stocks and the benchmark indices. The company operates approximately 2,800 grocery store and pharmacies under the company operates approximately 2,800 grocery store and pharmacies under 2 dozen banners in the 35 states, and also sells fuel through over 1,600 centers. They also sell fuel. Okay, the grocery business is what's been saving the big box stores like Target and Walmart. Hmm. Especially warehouse giant Costco, high inflation has been curbing consumer discretionary spending in favor of consumer staples, as indicated by Dollar General earnings. While they don't have many discretionary items, the pure play in consumer staples is Kroger's. They specialize in the two most essential consumer items, groceries and pharmacy. It's like owning Target without the clothing and electronics and CVS without the marked up to discount down prices. They also have a thriving private label businesses, our brand, which grants them higher margins and accelerating sales growth. Kroger also owns a tons of real estate. Its shares are trading at 11.5 times forward earnings and sports at 2.17% dividend yield, ideal for value investors. One stop consumer staple stock, okay? Steady Eddie wins the race. Staples are more than stable. Attractive pullback. So here the this author GU, this guy, uh, believes that this is what value investors have to invest on. Hmm. Staples are more than stable. Kroger CEO Rodney McMullen commented, Kroger delivered strong second quarter results propelled by our leading with fresh and accelerating with digital strategy. We're incredibly thankful for our dedicated associates who continue to deliver a full, fresh, and friendly customer experience. Our consistent performance underscores the resiliency and flexibility of our business model, which enables Kroger to thrive in many different operating environments. We're applying technology and innovation to improve freshness, grow our brands, and create a seamless shopping experience so our customers can get what they want, when and how they want it, you know? Mm. With zero compromise in quality, selection, and affordability. Private label is the growth driver. Kroger's has evolved its private label brand beyond being just cheaper knockoffs. Customers are actually preferring their culinary food and natural organic brands over national brand names. Its private label brand saw 10.2% year over year growth and nearly double the pace of general identical grocery sales of 5.8%. They sell over 10,000 products under its private label brands, including Simple Truth, Private Selection, Bloom House, Bakery, Fresh Goodness, and Home Chef. They launched another private label brand, Smart Y, in the quarter. It's our brand private product won 12 Editors Picks Awards for Best New Product in 2022. So Kroger is one of companies that you should invest because its author, this this guy, this author, especially during this COVID period, people look for cheaper products, right? That's one of the reasons why the company named the Dollar General is making a lot of profits, whereas like Target or Walmart are making less profits than before. So Kroger, they provide fresh goods and like staples. So in that perspective, they're making some kind of profits these days. So here, this guy says that staple. What does it say? Staples are more than stable. Yeah, that makes sense, right? Okay, let's go on to next article. Upwork shares stumble into bargain territory. Upwork is like the platform that I used before. You go into platform pretty much to share, not share, pretty much to hire freelancer. The freelancer who provides service that you want. Okay. I once hired a programmer to make a game myself, and it 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 became a failure at the end, but then it was a good experience overall. Anyway, let's start looking at this article. The world's largest freelance marketplace platform, Upwork, shares can't seem to catch a break as they trade down on the year, despite strong industry tailwinds projecting nearly 500 million worldwide freelancers by 2030. Mm. The sentiment on the stock continues to be negative. The pandemic triggered lockdowns were a boon to the company as remote work became a mainstream phenomenon that has been sticky even though the reopening. Okay, inflation and macroeconomic uncertainty is having an impact on growth in Europe. Enterprise clients are the growth driver. Mhm. The company added 36 new enterprise clients, including ServiceNow. The company added 36 new enterprise clients, including ServiceNow, Exertion, Newsweek, Fanatics, and Pearson. Hmm. Enterprise revenue is growing at a 45% clip with $1 million clients growing significantly. The pandemic has spawned a new moral. The pandemic has spawned a new normal for the workplace, which is now elastic and commonly includes remote work. Mm. The apathetic reaction in the stock price might be more of an industry sentiment struggle as competitor Fever International shares are down on the year. However, this could be a buying opportunity for investors who believe in the continued adoption and growth of freelancers and remote work moving forward as the tailwind gains more momentum. Upward recently added features, okay? Upward improving fundamentals, attractive price levels. And let's look at this one more time. Upwork. Hmm. So really, really attractive Upwork. Hmm. Okay. Its peak was 59.21 and current price is 15.93, which is like 1/4, right? And its first target estimate is 30, which is like double of current price. So um, even if I invest some money into it, it'd be doubled next year or so, right? I'm gonna have to take a note of it. So Upwork. Okay. The what is it? The appeal and problem with using Upwork. Okay. Upwork clients have actually moved their non-Upwork contractors to a platform to take advantage of the global payroll and work protection products, which ensure compliance in 160 countries. The Upwork platform accommodates the needs for unified billing with enhanced visibility, reporting, and worker classification peace of mind. Upwork takes a lofty 20% fee for jobs to new talent. The fee eventually drops after certain income milestones are achieved. For the client, the hiring process for talent on a per project or hourly basis is simple. The client pays Upwork, blah 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 blah. And what's the disadvantage? 'Cause I used it before, so I know what advantages are. Um, However, it may be a turn off for workers who believe the commissions are just too high. Okay, commissions are just too high. Yes, indeed, and seek to negotiate an off-platform agreement. Okay, okay, okay. This is ultimately the catch 22 that Upwork or any freelancer platform has to solve. So, in order for this kind of platform to gain money, they've got to come up with system. Um, Pay because commission is like one of the main sources where they can get money from, and like without it, they gotta come up with something, right? And people, uh, it's hard to negotiate with people online because people like myself, I'd rather meet people uh when I start the project the first time. I'd rather see them uh like offline. It's hard to believe, people, right? Hmm. This is ultimately the catch 22 that Upwork or any freelancer platform has yet to solve. Take less fees to ensure talent retention or raise prices, but risk losing clients. Hmm. Volkswagen sets Porsche IPO at up to 9.4 billion euros. Okay, Volkswagen has set the price range for a multi-billion euro sale of a minority stake in luxury brand Porsche. Well, let's repeat this. What is it? Volkswagen sets Porsche IPO at up to 9.4 billion euros. Volkswagen has set the price range mm, for the multi-billion euro sale of a minority stake in a luxury brand Porsche, as it's prepare an initial public offering to fund VW's investment in new technology and business, including electronic car software services. Set the price range for the multi-billion euro sale of a minority stake in luxury brand Porsche. Uh, 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 uh. Let's go to the next one. U.S. markets sink ahead of another expected interest rate hike. Okay. Uh, I'm gonna have to take neutral position, not like sell or buy. You know, Wall Street pointed lower ahead of the opening bell Monday, ahead of another mm, expected large interest rate hike from the U.S. Federal Reserve. Futures for the Dow Jones Industrials and futures for the S&P 500 each tumbled 0.9%. Britain was observing a day of mourning for Queen Elizabeth II. Japan's markets were closed for a holiday. Markets have been on edge because of stubbornly high inflation and the increases in interest rates being used to fight it. The fear is that the Fed and other central banks might overshoot their policy targets, triggering a recession. Most economists forecast the Fed will jack up its primary lending rate another three quarters of a point when the central bank's leaders meet this week. Fact is, hawkish expectation built on the hot under the hood U.S. inflation print means that markets have good reason to be braced for headwinds amid a prospect of higher rates and arguably higher for longer USD as well. Hmm. Okay. It's what everybody know. Uh, it's what everybody know. It's if interest rate hike is expected, stock market tumbles. Right, ahead of another expected interest rate hike. Sink, sink ahead of uh another expected interest rate hike. Adobe perfects the art of the face plan for investors. Okay, what is it? Riddle me this. How do you shock investors into a 2 day selling frenzy, vaporizing off your share price and off your market cap just after releasing great earnings? How do you shock investors into a 2 day selling frenzy, vaporizing off your share price and off your market cap just after releasing great earnings? Answer by announcing a cash in stock acquisition, paying 50 times sales for a company with $400 million ARR in revenues, and do it a day ahead of scheduled earnings into a fear-driven market sell-off. In the wake of a technology behemoth, digital cloud creative software company Adobe has just perfected the art of the face plan for its investors. Okay, come on, let's do it. Let Adobe. Mm, Okay, I get that. Mm, Adobe. Hmm. The company also faced nasty FX headwinds from the strong US dollar, like Salesforce and Oracle. However, investors are more concerned over the acquisition of FEMA, signaling that it could be a defensive play born out of a desperation despite revenues hitting all-time highs. Investors were clearly taken by surprise on the news and the following stock collapse. Could this be an incredible buying opportunity or the start of a painful valuation reset for shares of Adobe? Hmm. Earnings were good until okay. Hmm. Pullback levels. Close eyes and swipe right at any coach can lightning strike twice. Hmm. Okay, let's go on to the next one. What is it? Four ways continuous learning will make you and your business unstoppable. Let's read this just for fun, okay? Fast learning requires you to identify what you don't know, what you need to know, who has the information, Um, and how you will acquire the new knowledge. It requires quick action and can cover a broad spectrum of knowledge and skills. With the evolution of microlearning, you can master a wide variety of concepts and skills through bite-sized, on-demand content and articles. What am I trying to accomplish? What are the skill gap that exists? Okay. Your business evolves as you do. Learn quickly. Learn quickly is a necessary skill. Okay. Learn quickly is a necessary skill. Okay, I get that. It's a state of learning, integration, reflection, repeat. Once you've identified your broad learning needs, the experiential learning cycle is applied to fine tune your approach. The experiential learning cycle, made known by educational theorists, David Cope suggests that you learn by doing, making learning meaningful through experience. Here's a model made relevant to the entrepreneur. Concrete experience, reflective observation, abstract conceptualization. Your willingness to share what you learn will set you apart. As an entrepreneur, you offer value with a product or service, but what sets you apart from others in your industry? Human connection is an essential aspect of your business, and how you connect with others will separate a mediocre business from one that is authentic and intriguing. One way to connect is using a story. Your story about how learning has impacted your business. When you make learning central to your business, the potential for expansion is limitless. Learning central to your business, the potential for expansion is limitless. What you learn with such a pod, it's all about learning, isn't it? Oh, if you learn it quickly, it's a necessary skill for success. Um, the state of learning, integration, and reflection and repeat. So learning comes first, and as you do, your business evolves, and if you share what you learn, it will set you apart. Okay. And if you learn something and it has become central to your business, the potential for expansion is limitless. Anyway, this is not related to what I mainly talk about in my YouTube video, because it's about 4 ways continuous learning, and if you do it this way, your business will grow. Well, it's totally the off topic because I mainly talk about stock, but I just read it for fun. So let's go back to stock news again. Okay, in Yahoo Finance. Okay, from MarketBeat.com, what I realized is that uh, price of the company named Adobe is now relatively low compared to last year and a year before, probably because of acquisition of Figma. It has shocked people worldwide, I guess. Anyway, it's a attractive pullback level where I want to trade. So I'm gonna have to think about investing some of money into it. Uh, at the end of this year, probably I'll just have to take a look at it because um, you know, Federal Reserve will hike interest rate again, probably soon at the end of this year or so. So I'll just have to take a look and see the right opportunity. Okay. Okay, let's start finding new articles here. More earning disaster like FedEx may be lurking. Okay. Stocks fall as Wall Street braces for Fed meeting. Okay, here it is. Stocks fall as Wall Street braces for Fed meeting. Hmm. So Fed meeting and people expect another interest rate hike. So stock market sink, right? Hmm. All eyes on the Fed. What to watch this week? Sterling languishes near 37-year low versus dollar. Okay. What to expect from Salesforce or Dreamforce? The stock market is not the economy in an important way. Hmm. Fiscal, Rivian, or Lucid. Which EV stock is the better buy? Goldman Sachs prefers the US stock market. Why Alibaba is an exception? Okay. Is Snowflake stock a buy as consumption-based business model tested? The biggest Fed rate hike in 40 years? It could be coming this week. Wow. Just a minute ago, I said the Fed rate hike will come at the end of this year. It's now already September, October, November. It's already September, so I guess September is considered as the end of this year. Anyway, it could be coming this week. In this article says, okay, cybersecurity stocks watch amid Uber data breach. Surviving the Fed is as easy as one, two, three. Okay, you would better sell 10 stocks before things get worse. Analysts say. Blue chip stocks hold up better in volatile market. Here are two strong buy names that Ray Dalio likes. Okay. What to read? Costco, AutoZone, Leonard, Darden, and other stocks for investors watch this week. Morgan Stanley, quant sees capitulation risk rising for equities. Fintech stocks watch. Okay. Uh, China's EV startups suffer widening losses despite sales boom. It's an interesting article. Nvidia. Mm, okay. Mm, I know. I have to admit that I'm ugly and I look like gorilla, but there's nothing I can do about it. Hmm. That's how I was born. Uh anyway, I've been doing YouTube live for 28 minutes and I'll try to wrap up this as soon as possible. I just picked like 8 articles, and after done reading 8 articles, then I'll just finish it. Okay. Okay, let's go to first article. Okay. What I just chose is a more earnings disaster like FedEx may be lurking. Hmm. Okay, it's written by the author named Brian Suzy. Uh, let's see what he says. I spent the weekend reflecting on some bond analysis I provided in Yahoo Finance Live Friday morning's post. Uh, okay, here's the main point of this article. Basically, FedEx continues to drop the ball. The economy may be challenging. Uh, hmm, uh, mm, okay. Okay. This is it for today, and I just picked 7 articles, but I'm gonna just read it tomorrow or the day after tomorrow. Okay, I will see you guys. Bye.